Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we resume the trade after a stellar run last week, the momentum has continued on the upside, though there have been marginal profit bookings since morning the market opened. To give you certain levels on the Sensex, Nifty Bank, Rupee Dollar and crude oil, well, the Sensex is up 110 points, level is 69,935. Nifty up about 37 points, 21,006 is the level on Nifty. Bank Nifty up 108 points, 47,370 is the level on Bank Nifty or Nifty Bank. Rupee Dollar, marginal 2 paise strength on the rupee against the dollar, and the level is 83.38. Brent and NYMEX, this is where the positivity is. Even despite the announcement of production cut by OPEC plus, crude oil has been lower. Brent is trading at about $76.22 to a barrel, and NYMEX is trading at about $71.53 to a barrel, with a marginal uptick compared to what we've seen last week. And this is primarily because the prices are lower, primarily because of the concern on the demand front, and that is the reason that despite the production cut by OPEC, demand has been subdued and we've seen lower level on the energy basket, that is Brent and NYMEX. Couple of things happened, friends. Of course, the credit policy announcement last week has been done and dusted and digested, but in line with expectation as far as status quo or a pause, commentary or the verbatim from the Honorable RBI Governor with respect to the Indian economy was very strong, and expect the growth moment to continue. And the anticipation post this RBI policy that we saw last week, there is a general feeling on the street, of course, that possibly in the first quarter, calendar quarter, if the inflation numbers are within the comfort zone or the elbow room of the Monetary Policy Committee, then just maybe there might be a small interest rate cut that one can expect in the first calendar quarter, that is Jan, Feb, March 2024. Of course, a lot needs to be seen with respect to other data points, but this is the general feeling on the street. With respect to the performance of the market, well, this morning not only did the Nifty cross over the 21,000 mark, but the Sensex also managed to cross over the 70,000 mark. So both Nifty made an all-time high crossing over 21,000, and Sensex crossed over 70,000, though they are marginally lower than what we've seen the highs this morning, but nevertheless we are trading in the positive zone. Now, just to give you a little bit of past history, not very distant but very recent history, and if my memory serves me right, friends, on 2nd of November we were, Nifty, I'm talking about Nifty spot, we were at 18,850 or 18,870 or thereabouts, and from those levels to today, that is 11th of December, we have managed to gain a lot of ground, primarily because of the outcome of the state election, and of course an anticipation next year. What is likely to happen, this is just an anticipation, but a lot needs to be seen from now up until the election. Of course, in the middle we will see union budget on 1st of Feb, so markets will take cue from that also, etc., etc., and of course anticipation of the outcome of the big general election in 2024. So all these played along with the sentiments of the market, and the result is we are where we are. So expect this momentum to continue. If we are able to maintain on the Nifty spot about 21,000 decisively for a couple of days, then this momentum can take us towards 21,200 and even 21,500. but we may see intermediate profit booking, whether it is in form of intraday, that is we open up with a positive note, then correct a little bit and then recover. Something like we've seen this morning. We opened up strong, we came down, we went up again, we came down. So this kind of intraday correction cannot be ruled out. Or we have decisive days of profit booking. But the momentum remains strong. So the higher end anticipation is, if we are able to stay afloat, 21,000 on the Nifty, 21,200, 21,500 on the lower side, 20,800, 20,850 is where I think you might see some amount of support coming through. So this is a broad range that we can expect in the markets for this week, but the momentum is likely to remain on the positive side. Sectorially speaking, our view is that auto sector is likely to be in the focus. First, because of the year-end, calendar year-end, there are going to be discounts that are likely to be offered to the customers to lighten up on the inventory. And the second news flow is that there is anticipation from 1st of Jan 2024. A lot of automobile manufacturing companies are going to increase their prices of the products. For example, Tata Motors have already gone on record and stated that from Jan 2024, there is a likely possibility that they are going to increase the prices of their products, that is vehicle. How much, what quantum, that remains to be seen, but Tata Motors have already taken an initiative, and our sense is that other companies will also follow. So auto sector would be in focus for good and bad, of course, because there will be short-term discount related issues which may impact the profit margins, etc., etc. But that is just a short-term blip according to us. All sectorial indices, friends, are trading in green, whether it is Sensex, Nifty, mid cap, small cap, or other sectorial based index are trading today with the green mark, and expect this positivities to continue. On the crude oil front, in case if some huge news flow on the global front does not arise, then we expect crude oil prices both on Brent and NYMEX to settle down a little bit lower than where they are. And because we have rallied in the last month or so, especially over the last week, 10 days or maybe fortnight, expect some short-term profit booking in the markets. And of course, that range that I have mentioned would be keenly watched out for. 20,800, 850 on the lower side. If we are able to maintain about 21,000 on the Nifty spot, then the next trajectory that we need to watch out for is 21,200 and 21,500. So, there will be push and pull from both sides. So friends, every time we interact, we give you investment ideas. First one is from the housing finance company Canfin Homes. And our anticipation is that real estate sector is likely to do good. A reflection of that good performance from real estate sector will fall upon housing finance companies as well, and the fact that interest rates have been stable, I think this will be tailwind positive for housing finance companies. So Canfin Homes is the first investment idea, and the second one is from the Infra Engineering. The name of the company is, it's a mid-cap company, HG Infra and Engineering. The reason why we believe infrastructure sector will also be in focus is purely because of the decisive state-wise result of state elections and tailwind positive for the general election next year will keep infrastructure sector in focus. Hence, we believe that it will be prudent to give out one investment idea from the infrastructure space, and this company is tilted towards both infra as well as engineering. So HG Infrastructure and Engineering is the second investment idea. Mind you friends, both these are long-term fundamental investment ideas. These are not for short-term or medium-term. We have come out with a fundamental research report on these two companies, and our belief is that long-term investment will pay off decent returns on your investments. Don't rush into it. Start with a small exposure and as and when you get correction in the market or in these stocks, have the strength to add to it on dips. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of your health. Bye-bye.